Hello, everyone.
Hi, everyone. Welcome to our fourth episode of the weekly market report with Irfan Khan and
Joseph Virgilio. And for those who don't know me, I'm a veteran hedge fund manager with 25 years of Wall Street experience, managing long-short equity funds. And I've been credited for being the first ever fund manager who has launched the very first sustainability-focused hedge fund back in 2004.
okay, great one. So, without further ado, let's get right into it. What is the statistic of the week, Joseph?
Statistic of the week. In a bear market, 2/3 of the value of your investments will be lost in the last 1/3 of the bear market. That's basically because the theory, this goes back to behavioral finance again, that the complete washout basically is the one that will take your value of your investment value down 2/3 in the last 1/3 of the bear market. Usually is the most violent, and that's when you know when the complete washout or capitulation has occurred and where a base may be forming.
Okay, that then goes right into sort of behavioral science and all that, which we're not going to go touch upon today any further. But
Psychology, as usual.
let's.
You know,
Sorry.
it's psychology as usual. You know, I was having a conversation with a friend of mine yesterday on the phone, and he was like, and he lives in Italy, and he doesn't dabble with the stock market. He's of the opinion that it's a speculative tool, and maybe he'll buy bonds, but he'll never buy stocks. And I asked him, can you tell me one time that you saw an equity index crash to never recover? And he couldn't give me an answer. I said, there you go. So after an average of 18 months, after a crash or a very heavy correction, markets are already at new highs after about 18 months on average. So with notion that the stock market is speculative, not really. I mean, for the long term, you always win. So if you are investing in a stock market and the stock market crashes and it always comes back up, same holds true for an ETF, whether it be sectorial, whether it be tied to an index. The speculation comes with companies, individual names. So a company can go bankrupt, right? But an index or an ETF, unlikely. That's all.
Got it. Good to know. What data do we have on inflation and unemployment this week?
Yeah, well, they were expecting a 3.1 nominal. Instead, we got 2.7. There's some skepticism over the data. Some data is still missing. And some of the way they recalculated the data has some people scratching their heads, some economists scratching their heads, and they're trying to figure out whether the new way of interpreting this data holds true with where the market is now. So, but anyways, market has recovered, or at least the tech sector has recovered, as we've seen. I was a bit early on our last video. I said maybe tomorrow the market should bounce back tomorrow, and I meant Monday, but it happened on Thursday and Friday. But okay, so all right. So some technical levels have been restored. This shows momentum going into the close of the year. And
Okay.
going back to inflation, we had a very mixed unemployment report, and we had a better than expected CPI. Now, whether it's questionable or not doesn't matter. But now we have.
Let's tell our audience what CPI is.
It's the consumer price index, which is the inflation index of the United States. And these two data points have now given the green light for the Fed to cut again, if need be, in January or months to come, because inflation is lower than expected, and the unemployment numbers are showing some fragility, but enough to cut again, but not enough not to cut again either. You know, so carte blanche to the Fed now.
Okay. Do we forecast any potential further rate cuts?
And that's what we just discussed. So it's possible. It's possible that we will, but too early to tell. Let's see where we are at the beginning of January.
Okay.
But we
Okay.
need more
All right.
data coming in. So it's we had these two data points that are very, very positive for the Fed. But let's see what happens in the next week, in the coming weeks.
What's this rumor about Nasdaq filing for 23-hour trading? What is that all about?
Yeah, the Nasdaq has just asked the SEC and the regulatory bodies to extend trading hours to 23 hours a day, 5 days a week. So that would not include weekends. It's going to be very interesting to see what happens when, I have my P&L at 10 o'clock at night when the market closes up or down X, and then I wake up in the morning as a completely different number, We'll have to see. That's going to add a lot of stress to, it's going to add a lot of stress to money managers for sure.
Because right now we're at 6.5 hours a day, right?
Well, it's from 9:30 in the morning until 4 p.m. Right, but
Yeah.
like Europe, for example, opens at 9 and closes at 5:30, depending on what country. There's like Italy closes
Yeah, I
at
was referring
5:30,
to
I
Wall
think.
Street.
Yeah,
But I mean, that would be an incredible shift going from 6.5 hours of trading to 20 to almost permanent round the clock trading 5 days a week.
but I remember they floated this around in the year 2000, in the midst of the dot-com bubble. I remember there were discussions. So that's when they actually extended the trading hours. For like an hour or two, but technically you can still buy pre-market but the market is not open. So this is now going to be a different animal completely, because there will probably be more liquidity than there is now after hours, right, or in pre-market. So it will be very interesting to see. Very interesting. Yeah.
Okay. Okay. What is the stock of the week?
Lumen Technologies, the merger between Century, what was the name of the company? CenturyLink, and oh God, I'm drawing a blank now here. CenturyLink and Level 3 Communications. This is a company that is engaged in the wiring of broadband in municipalities, states, and the government in general, around the country in general. So Lumen Technologies is a company that is going through a restructuring phase. I am long the stock. Again, it is not an investment advice. Anybody who wants to follow what I do, look and speak to your financial advisor first, do your due diligence. This is my portfolio, and what I do with my portfolio, I'm quite open with it, but do not interpret this as an investment advice. So Lumen Technologies, great company, like it. They're making a big comeback. They were a great, Century was a great company back then when I was still managing active funds until 4 or 5 years ago. But since then, they went through a restructuring. The company looks really good. The analysts are aggressive on growth potential next year and the following, and just to keep an eye on it. I would like people to take a look at it and see what they think. Actually, if you have any idea or you have any opinion on Lumen, or please feel free to comment down below and let us know your opinion.
Absolutely, absolutely. And this brings me to reminding our audience to please do not forget to comment. We always like to hear your comments and engage with you. Please do share this channel with anybody who you think might be interested in following us. And absolutely, by all means, you need to subscribe.
That's imperative if they want to be.
And this not this helps us. This helps us definitely in our activity. Obviously, we're doing this because we have a passion for this. We have a vocation for this, and we'd like to be able to share with anybody who might be interested in knowing more about the stock market.
Yeah, this channel is really conceived with the notion that we want to simplify things for investors who are out there that don't know what's happening with the stock market, and they just want some guidance, or they just want to hear the opinion of a professional who's worked on Wall Street for 25 plus years. And also to help those who are interested in what we do and or want to start investing, I suggest young college graduates, as soon as they get their first job, to start investing on a regular basis in an equity index and let that ride until you retire. Or, well, until you retire. You rebalance at some point into fixed income, because obviously you don't want to be exposed to equities when you're 65 years old, 100% equities when you're 65 years old. But it's the key to wealth is to start investing in the stock market at a very young age. Take advantage of compounding interest and the growth of the market itself. I mean, like I said before, the stock market can crash, but it's always going to come back up. And those are the times when you add to your investments. When the market goes down, you want to buy low and sell high. You don't want to do the reverse, right?
Great. That's just wonderful, wonderful advice. This is our last episode of the year, Joseph. So I guess we'll be back, not next week, but maybe the week after that.
Yeah, the first Sunday of, what is it? The second Sunday of January. The second Sunday of January.
Okay, so the second Sunday of January we'll be back. Let's take this opportunity to wish our audience happy holidays, Merry Christmas, Happy New Year, and we will be back in a few weeks.
Yeah, happy holidays to everybody. Don't forget to comment below. And if you have any questions, please write them or ask them, because I will be replying. All right. Happy holidays to everybody.
Thanks. Bye.
Thanks, Irfan. Ciao.